A very good evening to you traders. It's Mark here from the daytradingroom.com. Time is 9:30 in the evening, London time, Thursday the 10th of March 2011. This is the second attempt to do this video for today. I had called it a day at around 5:30, 6 o'clock London time, just because the market had gone quiet. I made four great trades, 4 out of 4, and I just felt pleased with the day, and walked away from the screens. I came back and realised that oil had spiked up from 101.5 to 104. Rumour was Saudi Arabia had been using live rounds on protesters, and obviously we can all understand the ramifications of that if true. So I traded the subsequent move, which we'll talk about in a minute, but this is just a redo of the video to include that action, and actually to go run through that sort of setup a bit. First of all, we'll go through the oil trades for me in the morning, if you like. A bit of a grind up, and actually if I just bring in the 15 minute and the 60 minute and the daily, hopefully you can see this clearly. 15-minute above, we all know what range we've been on oil. Top's been 106, bottom's been 104, midpoint's been 105. Pretty good textbook stuff, really. Tried to get back over the 106 yesterday, couldn't, but found support at 104, back to the midpoint of that range. And then today we finally broke the 104, and we were opening below it. Anyway, we opened up, we started to push up. It was anyone's guess really what was going to happen here. We just sort of chopped around a bit here. More important to me is the actual stock market open, 2:30. Push lower, really good strong push lower, so I'm already looking for a pullback on a short on this. Volume's pretty good, it's picking up. We also take out the earlier low, which is great. So we've got a couple of setups in one, and you get the little pullback, you get the drive down, you get the pullback. It just poked under the break level if I was to extrapolate that across, but you can just see there the candles getting smaller, the sort of the buying dying off, the volume decreasing, important to see. And so I took the short there, and I got a fill at 102.46. Rode that down, scaled out quite quickly at 102 excuse me, 27, which was before the low, so it's about there. And then I 102.15, so as we broke the low, so I'm taking out before the low to put some in the bank. I'm taking some out as we break the low in case we do the old double bottom trick. Then I want to scale some more out, and then I held some for final target, which for me was 102. It's an obvious sort of psychological level. We dipped under, I think went to 94.5, something like that. Hit the market, and as it's so active down there, I got a fill at 99. So nice to get under the 102 by a tick. So that was that trade. Good little trade. I left a little bit on the table as we did have a subsequent second move, which took us down another 23 cents or so. But I think that was the higher probability setup. For me it is anyway. Didn't take this, which is disappointed. I missed this actually. We had a good support here at 83, 101.83. There was a buyer. He was holding. We had the sort of bear flag pattern. He was holding the bid there. I was waiting for him to lift, because as soon as he lifted, I could see the pressure building on him. You can see the bear flag tightens. You almost get a little triangle towards the end of the bear flag, if you like. Let's take this off so we can see a bit more clearly. You almost get a little bit of a triangle at the end of the bear flag where the bounces are so small, and it just the pressure is building up on that buyer. He eventually lifted. I stuck my offer in at 101.80 as he lifted. I didn't want to use just a stop to get him because he didn't know what field he's going to get. And it just went straight through. It went to 60 in no time at all. So no fill on that. And I came out. I pulled the order. I didn't want it if it came back. The idea was to take the break when he lifted. Didn't get filled, so no joy. Sat on the sidelines. Now I'm starting to think, okay, we're approaching this 101. Keep an eye out for that. There could be a potential buy. I stuck an order in at 100.83, or was it 82? I can't remember. We'll go with 82. Um, Looking for that flush through the 101, take out the stops, and get a sort of an 18 cent, follow through. We didn't get it. I'm talking about this candle here. The low was 87, so I missed my fill by 4 or 5 ticks, but it was 82 or 83. I can't quite remember. Which is a shame because it did pop up and we almost hit the 20 there, so that would have been a nice little scalp trade. Now the important thing is, if I don't get the order on the panic move, I don't want it again. I don't want it to revisit that level. It's a different type of trade. It would have been great, and it was a good call, but I just missed it. I was a little bit cautious with my order, should we say? But I'd rather be on that side than getting filled at say 92 and watching it go to 72. Whereas if you're in 82, you can afford a little bit of room, allowing it to pop back up. So that was the premise of that. Missed the trade on there. So I'm still looking for the long. Didn't quite get a really deep flush, but I just thought we'd get a 30 cent move below. That was in my mind. I know what was the low. We got a 38 cent move. When we came to 62, we spent a little bit of time down at 62, but then I just saw some high bidders coming in. They were stepping up, taking the offer, and leaving residual orders of reasonable size on the bid. As soon as I saw that, I took a long, 169 cents, and just came all out at 101.01. And although a great pleasing trade, especially not to scale too early, just to take the whole lot out for those 32 cents. Slightly disappointed because I did think that there was a counter trend move potentially in play. We were due an overbought condition on the stochastics here on the 3 minute or whatever oscillator you want to use, if you even want to use an oscillator. But I'm looking for that counter trend cycle. Whether you use an oscillator indicator or not to judge that doesn't really matter. I was expecting that sort of thing, but just took that as a quick scalp. So left a bit on the table with that. So pleased with the profit on oil for this morning. Yeah, as I say, I was away from the screen. I came back and it was around about here, about 22 minutes to 7. We'd already spiked. I like to think I'd have taken this buy here. This was the little pause. It may have, maybe this was the first pause as we broke it. I like to think I'd have caught at least one of these if I'd have been at the screen, and maybe got to the next whole number. Very much doubt I'd have caught any more than that. I'd have probably taken away the whole number, but I didn't. Possibly taken the short there. I probably not though. I think it probably quite risky considering the volume of that and the surprise nature of that move. It was obvious it was news driven. Volume increased significantly. No pullback for a long time. So as I say, I arrived late. I arrived to the screen. Excuse me, after the move, but I'm still looking for the second subsequent push. This could go on to 110. You don't know what the news is at the time. You know it's news driven because you can tell by the volume and you can tell by the move. So you know that you want to stay on the long side unless something's obvious or unless you're taking a flush. But I really, if it's news driven, stay away from those. Just stay away from those. Trying to catch tops, unless it's really later on in the move, and we're talking 30-40 minutes down the line, and you've had pullbacks and what have you, and then the game changes. But after the initial pulse, I'm looking for another impulse move up. Nothing spectacular here, has to be said, considering the direction of the move. It was just that there was a seller here, 103.50. You can see actually the amount of candles. We did spike above it a couple of times, but it didn't allow much to go on there. He was holding. So on this candle, as we pushed down, but we couldn't break out lows, and then we pushed back up. As soon as we broke that, actually up front, I sort of guessed he would break a bit, and the momentum was hitting him. and I saw him dwindling. I could see that there was loads of momentum, so there was a good chance he was going to break. And as I hit the offer, he did break, and I got a fill at 51 rather than 50. But what's a cent slippage is nothing when the movement's like that. Scaled out 20 cents straight away. Then I scaled out again 85, and the final scale for me was at 91. Literally tagged at 104, just stopped dead. It just stopped dead. It wasn't going to go through. I was hoping that we'd actually run through the 104, create so much more panic, then run through that high. And I was hoping to get a really good run on the last one, at least 100 cents or something. Didn't happen, but the important thing is you see it on the tape. Just stopped dead. Absolutely stopped dead. I guess it could have paused and then took another drive at it. I wasn't prepared to take the risk, and by the time I, made the decision and noticed the tape had stopped, it rocked back 9 cents. So the final exit on there was a 103.91. So yeah, pretty good down oil for me. Let's go on to the Dow, the YM. Just two trades for me on the YM. Because we gapped down so much of a large amount, we were opening at the lower end of the overnight range. If you look at the top chart here, you'll see that the open is the dotted orange, the overnight low is the dotted yellow. So very close, 10 cents between the low. So there's a lot of weakness there. I'm expecting the weakness to continue. I'm looking for a short. What are the setups I'm looking for? I'm looking for either a push off the open that fails and then really picks up pace to the downside, so I can get short and look for a further drive lower, or I'm looking for a drive lower that pauses and then revisits the low, or an unlikely setup but I'm still aware of is a really strong drive higher, pulls back, starts to continue, get on there, and then we'll look for this range or gap fill. So those are the premises of the open. Really focused on the Dow today on the open, primarily because of the size of the gap and the levels we were at. So the setup turned out to be the first pullback. Drove down really aggressively actually from the open. Really hard move. I felt it was almost towards the end of the move, so I didn't hang around in this. I didn't get as much out of it as I could have done. There was a second push lower. The ticks were very low. This was a case of just riding the momentum while it was there, and as soon as the momentum started to dwindle, get out. That was the way I traded it. It did have a second push, as I say, but nevertheless, it was a good trade to catch that. I had to wait a while for that first pullback, but anyway, we got the first pullback there. We did hardly pull back in the ticks. Got the push lower, and then I'm all out there. So that's okay, but left a bit on the table with that. And as always, I'm still on the short side after that weakness has been exhibited, especially after the second push and the consolidation at the lows there. And the ticks are just not even, they're very low. We started to roll back up. The ticks just about popped above zero. I'm watching again. I see the size of the bars decreasing. The size of the green bars decreasing. The volume starts to dwindle off, and it's just starting to butt up against the 50% move down pulse, if you like, opening drive. So it's worth a short for me. I'm also looking at the Dow Cash. If I bring over my Dow Cash, you can just see that's a very small chart, but I hope you can see that 12,000 was within reach. The low of that pulse was 12,013. There was still an extra 13 cents of downside, so that was my ultimate target, and that's exactly what I did. I shorted it up here, and just scaled out as we push lower, with the final target really pleasingly at 12,000 cash. We did actually go another 20 cents or so below, but it was a 45 cent, something like that trade, tick trade on the last batch. So I couldn't have really asked for more. It wasn't far off the low anyway. Didn't quite get the push under, but was happy to come out at 12k into this good volume bar. I think it was the second bar here that really gave us the drive. But the 12k was as I marked 12k cash. I've marked this the equivalent the grey line here on the way out. That was it for the Dow for me. Um, you know, too busy watching oil to be involved in any of this. I'm half expecting perhaps a push to lows around this sort of time, but a classical sort of push down, counter trend, and then get panic. But the volume just wasn't there. The volume just wasn't there, so wasn't to be. No extra trade set up for me. Or one trade that I did miss, and actually, almost not pleased I missed it because it would have been a profitable trade. But the counter trend move, the 5 p.m. spike. There's 5 p.m. almost bang on. But I'm looking. I'm there. I'm hovering over the ticket. I'm ready to come in. But I just didn't get high tick reading. I wanted a tick reading higher than the prior. Just a little pop just to get the sweet spot. Didn't get it, and it did roll over. And the exit would have been on the oversold condition, or the VWAP was about the same, which would have been a good little trade. Obviously scaling on the way with the final exit there, so it would have worked nicely. But if the entry criteria don't line up, then they don't line up. I'd rather miss trades than take trades that aren't quite what I want. So hope everyone did well today and this week. Friday tomorrow, last day of the week. Manage the risk, and as always, if you'd like to email me, it's mark@thedaytradingroom.com. Stop by the blog. I occasionally do a few posts or post some news of interest, so if you're watching on YouTube and want to come over and have a look or ask some questions, email me, then please feel free. Good trading, guys. I'll be back with another video shortly.